Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at the markets and the news, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you find value at any time during the video, feel free to smash the like, ring my bell, hit subscribe, and share your thoughts in the comment section. I would appreciate that. Let's dig into the news. First, let me get my mouse highlighter on here. If I can get through some of these screens. There we go. I have like multiple screens of different sizes. They're all arranged kind of funky. First in the news, Q1 has ended for 2022. It's pretty amazing how fast time went by. The Bitcoin ended Q1 closely following S&P 500. I oftentimes, almost every day, talk about the positive correlation between Bitcoin, S&P 500, and also Nasdaq, and the negative correlation with DXDY. But there was an article in CoinDesk that showed the graph. You can easily plot this in TradingView if you want to, but they showed a 0.9 positive correlation between Bitcoin and S&P 500. 0.9 is really high. 1 is like 100% correlation. So that's extremely high. So that's pretty cool. And I'll continue to track the positive and the negative correlation between Bitcoin, Nasdaq, S&P 500, and the Dixie. Let's go to the next one. Grayscale threatens legal action against the SEC for rejecting Bitcoin ETF, and they've been applying for a Bitcoin ETF for a while now. And although the futures Bitcoin ETF was approved, it wasn't the regular one, kept getting denied, and they're threatening legal action. I think it's ridiculous why they continue to reject the Bitcoin ETF and approve the futures one. Another positive news for crypto and blockchain is the state of Washington in the northwest region of the United States. They approve a bill supporting blockchain adoption, and they will look for ways to integrate blockchain into various infrastructures within the state. So very bullish news for crypto and blockchain. Charlie Munger predicts a painful crash. Many of you know Charlie Munger. He's an exceptional investor. And basically what he's saying is that, here's a quote from him. What we get in is wretched excess and danger for the country. Everybody loves it because it's like a bunch of people getting drunk at a party. They're having much fun getting drunk, and they don't think about the consequences. Eventually, there will be considerable trouble because of the wretched excess. That's the way it usually works in the past. I agree with him. I think there's only so much excess and disregard for the foundation of investing in money and all that stuff, and eventually it catches up with us, and we will have a crash. But regardless of whatever Charlie says, we're gonna have a crash anyways because it's part of the cycle. When that crash is a different story. I know the author for Rich Dad Poor Dad also has been predicting a crash, but guess what? It's going to come whether they predict it or not. It's how are we ready to deal with it. It's not whether something's going to happen like Bitcoin or stocks. It's not whether it's going to go up or go down. That matters to some extent. It's how prepared you are and what you do about it. That makes the difference. Imagine having side money when there's a crash and you buy all the goodness. That's being prepared. Thursday's market tank. There's speculation among some people that the S&P 5 S&P options traded yesterday may have tanked in the market, and that had to do with the huge options from J.P. Morgan that was traded. It makes sense. I'm not going to go into it, but it makes sense. Okay. Oh, this one's a good one. Lawsuit accusing 10 banks of rigging $23 trillion in U.S. Treasury market was dismissed by a federal judge. This has been what is it called? And it was an antitrust lawsuit covering 10 of the world's largest banks. And this was it's been going back. I'll name some of the banks that were in this lawsuit: Bank of America, Barclays, Paribas, Citigroup, Credit Suisse, Goldman Sachs, J.P. Morgan Chase, Morgan Stanley, NatWest Group, UBS, and a trading platform operator called Tradeweb Markets. The antitrust lawsuit claimed that these banks were in chat groups discussing ways to manipulate the market and their customers. What a surprise. Banks manipulating the market and customers and cheating customers? What? Oh, man. Okay, anyways, it was dismissed after years because the defendant or the plaintiffs failed to deliver some things the judge asked for. Critical. This one is critical. 2-year Treasury yield tops the 10-year rate. They're inverted. So what that means is recently, earlier this week, we had the 5-year and the 30-year inverting. Now we have the 2 and the 10-year inverting. So for the 5 and the 30, okay, so that is usually a prediction for it has a high degree of probability for a recession. Now you have 2 of them combined. That is extremely high. So 2 inversions, and these 2 are very key in predicting previous recessions. But for those of you who are curious, during recessions, the stock markets and crypto markets, they don't seem to be impacted in the long term. In the short term, they may be impacted because of the news and the overall how things are tied together. But on average, they're not really that impacted. But we'll see. We'll see what happens with this time. Good news for the U.S. economy. They added 431,000 jobs in March as COVID fades, but inflation is running rampant. Unemployment rate also fell to 3.6. So it wasn't where the expectations were, according to the experts and economists, but they're very positive numbers. So the unemployment rate fell from 3.8 to 3.6, said the Labor Department today. That puts it at a 50-year low, just above the 50-year low of 3.5. So kudos to the U.S. economy. I know we're facing a lot of pressure in different directions from the macro, the invasion of Ukraine, and inflation and all that stuff. But great job, America. On the other hand, U.S. factory activity stumbles in March to the lowest level in 18 months. This is according to the ISM surveys. By the ISM is, I mentioned this in the past, it's the Institute for Supply Management, Manufacturing, and they use the PMI. That the PMI index is a closely followed index for U.S.-based manufacturing, and they use that as also a gauge for inflation too, and how the economy is doing. So manufacturing activity slipped to 57.1% from in March from 58.6 in the prior month. So some positive, some negative news there. Let's go to We did the economy jobs already. A little bit of bad news for the European area. Eurozone inflation hits another record high of 7.5%. This is according to CNBC, as Russia-Ukraine war pushes up energy prices. As you know, several of the European countries are highly dependent on Russia for their natural gas and oil. And so if due to sanctions and the invasion of Ukraine, energy prices have gone significantly higher over there. And that's going to add inflation pressure for those countries. It's actually have a rippling effect all over. China's largest banks signal tough times ahead. So basically, 5 of China's largest banks have said that the country's lenders face multiple headwinds this year that include the pandemic. As you know, some of the major cities have shut down for COVID testing, etc. Global politics and domestic turmoil in the real estate industries over there, like Evergrande, etc. And so they're calling for support from their government. I've mentioned this several times, but keep an eye on China. Their economy is tied to the other major economies around the world. So if China is going to tank, so will the other economies. Related to China, that news also, their official manufacturing and purchasing managers index, their PMI, fell to 49.5 from 50.2. So they're not doing too well in that sector either. Russia gave a deadline of Friday today for natural gas and oil payments to be in ruble. However, the European countries said no, and now Russia is saying, okay, well, we'll give you some more time. I just don't know what to say about Russia. It's like a cartoon now. They're like a cartoon. Okay. Let's dive into the charts here. Heat map. A crypto market is very green today. Bitcoin 46.3, up 22,000 from the last drop to roughly about 44.3.2. Dominance 41, and they're up 0.82. Ethereum at 3.5, and that's up 4.52. Ethereum's doing really well. Look at the dominance client staying above 19 here, 19.37. You got ADA almost back to 118, getting back to 120. Luna climbs again. BNB up 3.41. AVAX up also at 3.5. So great day for the crypto market. Yay. Equities, U.S. equities market or markets here. And we got technology, pretty red. And this is heavily correlated with crypto, so we don't keep an eye on that. But overall, the rest, with exception of railroads and integrated FRE, these areas are red, but the rest are pretty green and muted green. We got, I hate this press F11 to exit full screen. I don't want to press it. Anyways, we got the communication services here in pretty green, consumer silico green. We got consumer defensive green. We got financial. The banks diversify, a little muted red, but over in credit services, asset management, etc. Pretty green to muted green and some muted red here. We got over in healthcare, pretty green and muted green. We got the industrials. We already mentioned these guys, but the rest are pretty muted green to green. Real estate, pretty green. Energy, pretty green to muted green. Basic materials, same thing. Utilities, muted green. So overall, pretty decent day for the U.S. equities market. But tech sector is having a tough time, and we'll see that in the charts. Here we go. Let's take a look at the watch list first. SPX, SD. I shouldn't just say the acronyms. S&P 500 here index, it's down. The Nasdaq index is also down. The Dow was up, but now it's down. So, and we'll look at the trends over here. The VIX volatility index for the equities, it's below 20. That's down from yesterday. The Dixie is up, and we'll see that over here. U.S. 10-year yield, that's up 1.79 at 2.38%. Oil fell below 100 with Biden asking with Biden requesting the reserve oil to be released into the market. So that's helping there, and that's down 1.9. Gold is down, and silver is down also. And you can see here the euro pair with the USD, that's down, so dollar strong there. The pound pair with the USD, that's down, so dollar strong there. The USD pair with the yen, that's up, so dollar strong there. So overall, dollar strong against these three currencies, and we see them climbing here. So let's dive into this, the trends over here. You can see the market, it's on a multi-day downward trend here, 3-day. This is Nasdaq. This is S&P 500 index, and this is the Dow Jones Industrial Average. All three are down on a 3-day run, but on a 7-day run, you can see they're still lately slightly up on the 7-day, but trending down into 3-day. And you can see there where they are opening, they're opening lower, kind of. Well, this opening slightly where they were yesterday. This one slightly S&P 500 up slightly from closing yesterday. Same thing with here, but they're chopping sideways and currently down from where they opened. The Dixie, I forgot Bitcoin. Bitcoin yesterday tanked, and then towards the middle of the day in the U.S. time zone, it picked back up and then continued to rally up, and then it's tanking down slightly here. But if you notice the correlation with the Nasdaq, it opened today, Bitcoin went up, Nasdaq went down, so there's no positive correlation there. And since Bitcoin has dropped and Nasdaq has dropped too, so some positive correlation, but not really. But if you notice with the Dixie here, Dixie since 2 days ago has been trending up. Bitcoin went down, so part of that negative correlation applied. But then at the end of yesterday, Bitcoin went up, but the Dixie continued to go up. So yeah, some negative correlation, but not really. And right now, Dixie's chopping sideways. Bitcoin's somewhat chopping sideways too. So some negative correlation there, not a lot, not a whole lot. Here's the U.S. 10-year yield. It's yesterday it went up, and today at market opening it started dropping. Over here in the UK, the European market, UK, it's choppy. You can see that 3 days ago or 4 days ago it went up and then it dropped, and then current session is trending back up again. Some recovery there. The DAX, Germany, it's kind of weird. It went in the last 3 days kind of choppy up and down, and then it's been tanking in the last 3 days. Similarly with the CAC from France, almost identical patterns there. The stock 600, similar to these two above DAX and CAC, it chopped in the last 4 days, and then on a downward trend on the 3-day. So over here in the Australian market, very similar graph with the European markets here. Current several days, past couple days, it's been trending down, but it's still up on a 7-day trend. The Nikkei 225, pretty much on a downward trend overall, even though they're up, they're recovering in the current session. The KOSPI in South Korea, they were up in these 3 days here, but in the last 48-hour period, they look like they're trending down. On the Hang Seng HSI, similarly, they were trending up in these 2 days here, but in the last couple of days, they trended down, and then they're having a bit of recovery in the current session. The Shanghai Shenzhen CSI 300, they've been trending up in the last 4 periods, so trending up here. So it's very mixed here. It's mixed. It's it's hard to decipher if there's any cohesiveness in the global market right now. It's very mixed, and that's okay. Right today, it looks like we're with gold being down. I see, we have it's a risk on, risk off. With gold being down, that's more risk on, in my opinion. With Bitcoin coming back up here and the equities market somewhat sideways. See it here. See how this one is positive now. The Dow Jones Industrial Average is slightly positive, 0.01. Yeah. So overall, just like a lot of this positive news in the U.S. economy, this negative news about inflation and warnings about recessions and all that stuff. There's a lot of mixed messages, so it's confusing for investors. And typically, the equities market, they like clarity. They like some kind of direction. And so when there's like confusing messages, it shows up here. So that's pretty much what it is for our market analysis today. I appreciate your time here. I have several more videos to do later on, and I will see you in those videos. I appreciate your time. Feel free to smash the like, ring my bell, hit subscribe, and share your thoughts in the comments section. Peace.